Welcome back, Freedom Savers. So today I've got a little warning for you, basically. I'm going to be talking about a new app and website out there for you to invest in bonds. This is similar to Acorns, where they do a roundup type thing where you attach a credit card to it, and then when you go spend, it automatically rounds it up to the nearest dollar and puts that extra money into the account, in this case the Worthy account. And then once it reaches $10, they buy, or actually they don't buy, but they issue a Worthy bond. So anyways, let's get into the details of this company, what they do, whether it's a good investment, what all the risks are involved in this, because I know this is probably going to take off, similar to Acorns and similar to other applications like this, where people think that they're investing into a good thing and it's passive with the roundups and all that good stuff, but they aren't taking into consideration the real risk they are taking with their money. And this one isn't like giving you cash back for free like Bumped, right? So with my Bumped app, when I attach a credit card and I go purchase something, money's not leaving me. I'm not losing anything. They are giving me free stock for my purchase, right? So it's a cash back type thing. This is not. This is literally taking your money and investing it into small companies out there. They're basically, let me explain what Worthy is, okay? Worthy Pure Capital is their actual name, or worthybonds.com. All right, so what these do, and they have a phone app as well. So what this company does is, so you attach a credit card to the account, you go to the store and you buy, say, $2.50 of something, it will round up to $3. And it will put 50 cents into the account. Okay? Then when it reaches $10, it will issue, don't mistake that for purchase for you, because they are not purchasing anything for you. They will issue a bond. I guess it's a bond. It's really an obligation for them to pay you, which is a 36-month, 5% interest rate obligation. Okay? So for every time that you get $10 into your account from rounding up, or you manually put $10 in, because they do have that available, you can automatically top it off, or you can just invest as much as you want. Anytime that you put $10 into this account, they will issue one Worthy bond. All right? And so what is a Worthy bond? So I went in their frequently asked questions. I've done some research on this because I saw another video on it, and I don't agree that this is safer than any ETF that you could possibly purchase on the market. So if you look here, what's the difference between a corporate bond and Worthy bond? A corporate bond is a bond issued by a corporation in order to raise financing for itself. The proceeds from our bond sales are used to fund asset-backed loans to growing American businesses. So what they do is they take your $10 and they say, hey, we owe you $10 plus 5% interest. Then they take your $10 and they find smaller companies out there who have an inventory, which most companies have inventory, and they give a loan to the small companies out there, and they take a claim on their inventory as collateral. All right? So basically, if that company refuses to pay Worthy or defaults on their loan, then Worthy, in theory, can go grab their inventory and sell it and liquidate it to get the money that's owed to them. And then in return, they should, right? The bonds are generally obligations from Worthy, and they're backed by its loans to growing businesses. All right? They're a lien holder on collateral, which is equal to the participation in loans, so in case of any borrow default. So basically, the collateral is a company's inventory, or a part of it. If they don't pay, then Worthy will go out and grab their inventory and go sell it, assuming it can be sold and assuming that it's still there. And then they'll use that money to pay off their bondholders, or basically you, who they have loaned who they've accepted a loan from. All right, so there are risks here. So when I first watched the video on this company, the first time I ever heard of this company, by the way, I had all kinds of questions because I'm familiar with bonds. I'm not an expert by any means, but I'm familiar with how they work and the behind the scenes and the market. All right. So my first questions are, what kinds of bonds are they buying for me? Well, they're not. All right. They're issuing a loan, basically. They're issuing a bond to you, or a debt obligation. The reason I was asking what kind of bonds are they buying for me is because there's corporate bonds, municipal bonds, government bonds, junk bonds, all that. And all of those bonds have credit ratings based around them, right? So how confident are we that that bond will be paid back? I have no idea what Worthy's credit rating is. They're not a publicly traded company. My other questions about when I first saw the video was what background fees are being taken from the purchase. Because when you buy bonds through a broker, there's hidden fees in the background, okay? And then, are they buying them on the bond market, or are they initial offerings? Can you sell your bonds before maturity? If you can sell them, how do you know what the value of them will be? Because the prices fluctuate based on maturity date and interest rates. So there's a lot of stuff behind bonds. Bonds can have the same or even more risk than stocks, depending on these factors. So there's no way I'd ever agree that this is safer than buying an ETF on any broker, M1 Finance or any broker. These securities are not backed by SIPC. All right, if you don't know what SIPC is, I have a whole video on it. But SIPC is the Securities Investor Protection Corporation. So when a broker becomes insolvent, then your securities that you own and that broker is holding for you and has sold you are backed up and insured by the Securities Investor Protection Corporation. Worthy is not a SIPC member. I have confirmed that 100%. I also have confirmed they're not a broker in any way, shape, or form. So here's what I've found from my research on Worthy Capital and the whole bond thing. So the bonds are issued by Worthy Capital themselves and are not traditional bonds, okay? These are not bonds that are sold on the market. These are not publicly traded bonds in any way, shape, or form. Basically, it's just a loan that you are giving this particular company, Worthy Capital. They are giving you a 36-month, 5% interest obligation in return. In other words, they're saying, we owe you 5% interest on your money that you're giving us, and we'll give you your money back in 36 months. They're not corporate bonds. They're just obligations that Worthy Capital is selling. And then they're taking that money and issuing asset-backed loans to small companies. Asset-backed loans means that there's an asset behind it that they're using as collateral for the loan they're giving the small companies. That asset in this particular case is their inventory. The loans they give companies are backed by the company's inventory as collateral. They are not a broker-dealer, all right? Worthy Capital is not a broker. They do not buy or sell securities. They issue their own bonds, selling them directly to the public. The bonds only reside with Worthy Capital in your dashboard application. They're not a registered broker. They're not being held by a registered broker. Therefore, they're being held by the issuer of the loan. To me, that is not good, because you're letting the person who you're giving a loan to be in possession of the actual contract, making them liable to pay me or to pay you. All right, so that's like, okay, you loan me $50 and we'll write up a contract and I'm going to hold that contract, not you. Does that sound right, wise to you? Doesn't sound wise to me, because I could just lose that contract, and what recourse are you going to have? So from their FAQs, the bonds are a general obligation of Worthy Peer Capital, backed by its portfolio of loans to growing businesses. They're the lien holder on collateral, equal to our participation in the loans. So in case of any borrower default, Worthy would liquidate that collateral, which in our case is inventory, to pay off the bondholders. Again, who says that inventory is even going to be available to sell? So there's a couple more risks involved with this investment. One is we have no idea of the credit worthiness of Worthy first. And secondly, we have no idea, absolutely none, of the credit worthiness of the companies they're giving loans to. they could be giving loans to businesses that are high risk, and chances are they'll never pay them back. The other risk is if all of a sudden something happened with this company in the news or whatever reason, and everybody wanted to take their money out of Worthy all at once. They wouldn't have the cash on hand to pay them. Because in order to have that cash, the companies they've given loans to would have to have already paid them back or defaulted, and they would have had to have already sold their inventory. So there's a couple more risks involved than we're seeing on the surface. So in conclusion, I just want to make this video real quick for anybody thinking about using this app and investing in bonds through Worthy Capital. I want you to know exactly what you're investing in. As with any investment, you need to do your research and you need to know what you're investing in. All right? Do that before you put money into it. This is why, I mean, you never know. This could be a great thing for you, and you may still want to invest in this. And if you do, great. I have no problem with people investing in this product. The problem I have with it is the way it's set up is it's easy to not pay attention to what you're actually investing in and not really know what you're investing in, especially when they're using the word bond. All right? Because all this bond is you're giving Worthy Capital a loan, and they are liable to pay you, and they hold the contract saying that they're liable to pay you. That's all this is. So in conclusion, as I put in my comment on the other video, in conclusion, my finding is that the risk of this investment is much greater than any bond ETF through any broker. All right, it's a unique application. Some people may want to invest in it, but as with any investment, you need to do your research ahead of time to understand the true risk you're taking with this particular investment. This is not an investment I personally would make and not going to put any money into. And I feel that having a small business's inventory as collateral doesn't seem that secure to me. Their inventory is constantly changing. Also, the contract and security between me and Worthy Capital is held by Worthy Capital, not a third-party broker, meaning they could just lose it. So these are my opinions on Worthy Capital. If you still want to invest in it, go for it. But at least now you have the knowledge and know exactly what you're investing in. All right, I'm sure it's going to have great reviews over the next year. And it's a unique application like Acorns and all these other ones. But as with any of them, do your research. Know exactly what you're investing in, please. That's the main thing. And don't take them at face value. Don't just read their advertising and read their website right off the bat and think, hey, this is fantastic, and invest in it. Look behind the scenes, look in their FAQs, do your research on what the loans that they're putting out are actually secured by. The whole works. Do your research is what I'm saying. All right, guys. I hope this helps someone. I hope this clarifies exactly what you're investing in if you are investing in Worthy Capital. And I hope you're having a great day. Have a good one, guys. All right, guys, thanks for watching. I appreciate it. Be sure to hit that subscribe button down below, and if you liked the video, hit that like button for me. If you want to hear any specific type of information, anything that you're interested in, you have any questions, just drop me a comment down below. Let me know what you think. Let me know your opinions on this video or any other video I've made. And if you know anyone else that might be interested in this video, please be sure to share it on your social media and share the knowledge. Thanks, guys.